Ladies and gentlemen, please join David, Benjamin, and me in welcoming an outstanding Canadian leader to our discussion this morning, the Honourable John Manley. A former Deputy Prime Minister of Canada, John was first elected to Parliament in 1988 and served 4 terms. From 1993 to 2003, John was Minister of almost everything. Minister of Industry, Foreign Affairs, and Finance, 3 of the most significant Canadian portfolios in government. Since leaving government, John has continued to be active in public policy as chair of the Advisory Council of the Canadian Global Affairs Institute and the Canadian branch of the Trilateral Commission, and as a member of the International Advisory Council of the Brookings Institute and the Wilson Centre Global Advisory Council. An officer of the Order of Canada, he is chair of the Board of Directors of CIBC and also serves on the board of numerous other publicly traded companies. John has just recently stepped down after an extremely successful 9 years as President and Chief Executive Officer of the Business Council of Canada, our foremost business association which represents the CEOs and entrepreneurs of 150 leading Canadian companies. In this capacity, John has worked closely with business and political leaders from virtually every sector and region across Canada and with top-level counterparts from around the globe. John has continued to serve as a critical bridge between business and government and as the senior voice of private enterprise in helping to shape key public policy. John has very kindly agreed to join Benjamin, David, and me in a roundtable discussion this morning of current and evolving North American geopolitical and economic forces and trends. Our thanks to Blackwood Partners for sponsoring this event. John, having served as both Finance Minister and Deputy Minister, then the CEO of the Business Council, you are pretty uniquely positioned to build on both David and Benjamin's comments this morning and to help us really try to drill down on what you feel are the most important issues and opportunities that face our industry. Let's go a little deeper on a handful of the economic and political forces that we've talked about so far this morning. I think, as both David and Benjamin did, maybe we should start with interest rates and monetary policy, topics near and dear to everybody in the real estate industry. You heard David and Benjamin present somewhat different views of the economies and how the central banks might respond. If you still had your finance minister hat on this morning, assessing that information and the cross currents that we heard, how do you assess the resilience of the business cycle? We're unquestionably in late innings, but how do you think it'll hold up? And what would you hope, if you were finance minister, to see the Bank of Canada do to optimize growth under these conditions?
So first, Gary, I see I have a new title as Deputy Chief Economist. Stay tuned, Ben. I'm sure there's room for both of us. Have you got an extra desk down there?
Chair and Deputy Chief Economist. Yeah.
So, I think if I were sitting in Bill Morneau's seat right now, and as you know, with my business council hat on, we were pretty critical of his last budget effort, much less critical of the fall economic statement. And Ben made a reference to the reduction or the introduction of accelerated capital cost allowance, and that as being an appropriate response to the U.S. tax cut. But when you isolate the politics of Canada and overlay current economic conditions, we can all worry, but these are good times to be the Minister of Finance. He's got a low unemployment. He can claim that middle-class incomes have risen over the last 3 years. He's got no crisis on his hands that he needs to deal with, and he has a response because of the accelerated CCA to the concerns about the impact of the U.S. tax cut. And the things that we worry about are a little bit obscure to the average Canadian. Now, remember that we're now about 10 months and a couple of weeks away from the next federal election. So we are in pre-election time. So I think what you'd have to say is what he hopes nobody notices is that the strength of the Canadian economy has largely been a byproduct of the booming US economy. And despite all of the noise around NAFTA and all of the challenges that the Trump presidency has presented, on a daily basis, those trucks are still crossing the bridges. The goods and services are flowing to the United States, and we're all benefiting from the sugar high that's going on in the US. So I think that as long as that continues to be the case through next October, Bill Morneau's probably feeling that they're going to be able to go to the people and say, look, we're not in bad shape here in Canada. You heard his fall economic statement. Compare us to the rest of the G7, he says. He's got that wind at his back. The worrying things are many of the things that David and Ben referred to, together with the fact that when we look at the degree of stimulus in the United States, you've got to wonder how long that sugar high can go on. Quite apart from Fed tightening or changes in monetary policy, the trouble that we've always found with fiscal stimulus is that what's a stimulus this year is a base for next year. So we've had this big influx with the tax cuts, which is a fiscal stimulus, plus you've got the repatriation of profits, which has come about. Well, what's the next act? And is there some limit on the extent to which the Chinese are willing to lend money to the United States and buy their bonds so that these deficits can continue to flow? So I think there's a lot of threats there, and I think for the Canadian political dynamic, timing is probably okay, because by the time some of those chickens arrive on their roosts, the next federal election will be history.
Well, let me ask you something a little more focused on what we heard from David and Ben on interest rates. And I think I heard two different things. We have wage and price inflation, which is relatively contained because of demographic forces, where we are in the cycle, other global forces which are disinflationary. But on the other hand, we have asset inflation, which is really worrisome. And unfortunately, interest rate policy doesn't discriminate between the two. So maybe John, you first, and then I'd like to get David and Ben into this. How do you try to utilize monetary policy but not hurt the economy while still dampening the asset inflation cycle?
Well, you may have been there and heard it said, Gary, one of our sessions. So the problem with monetary policy is it's a pretty imprecise tool. You can't use it very effectively to target a particular outcome. In fact, the allusion has been made to it being kind of like the shower, the temperature control in a shower in a kind of cheap hotel. That, you know how we've all had this experience. Like you get in and it's too cold, and you turn the crank and nothing happens, so you turn it some more, and then all of a sudden it's scalding hot. You try to turn it back the other way and it's too cold again. That's kind of the way I've seen monetary policy over the course of my time actually work. It's either too hot or too cold. And so I think that when Stephen Paulos thinks about this, my guess is he takes a long, hard look at the currency. And he's going to worry a little bit about inflation, but there's not much sign of that. And he's going to be paying a lot more attention to where the dollar sits, and he probably likes it somewhere around 75 cents. He's not going to be too happy if he sees it creep toward 80. Might start to get a little anxious if it gets down to the 70-cent level, but he's pretty happy where it is.
David, what do you think about the dilemma that Poulos faces vis-a-vis the U.S. Fed? You've got the Fed with a more hawkish governor than we've seen for a while, and yet we've got the currency issue that you've got to balance. How does he play that game?
Well, look, there's a lot of differences. I said earlier that the fiscal situation in the U.S. Is radically different. If you look at most models, and I would fully agree with Ben that you have to take models with a grain of salt, but you have to have a compass. I showed you the picture of the output gap in the U.S. We are beyond full employment in the United States. I would say most estimates in Canada, as imperfect as they are, would show that the output gap is closed. We're not actually in a classic excess demand situation. Looking at the labor market, I think that it's more wonky in Canada because if we were really close to full employment in the labor market, wage growth would be stable to accelerating, and instead it's decelerating. And as Ben had said, that's a bit of a dilemma. But look, if I was Stephen Poulos, and look, I've been openly critical of their raising interest rates right now, but I don't think you can really operate an economy indefinitely with negative real interest rates. And if I was Stephen Poulos, and I had to answer to myself in the critique that I had in the National Post recently, he would just simply say, look, we have one mandate, and it's price stability defined as 2% inflation. And every measure of inflation, and they have numerous measures, are all at 2%. So I would just say, we actually want to close that negative gap. I would say, well, maybe now is not the best time given the wide band of uncertainty over the economic outlook. I'm certainly, on what John said, I'm far less optimistic on Canada. I think we have numerous challenges right now, and I can't be positive on a Canadian economy where productivity growth is running 0% year over year. We complain about the US, productivity is a little better than 1%. It's zero in Canada, so we can talk about the great labor input and immigration, but productivity growth, we have basically a tax on capital and a restraint on capital in Canada that's really diminishing our growth prospects. That has to be corrected. The United States, look, it's totally different. I respect what Ben had to say, but with all due deference, wage growth in the United States is accelerating. And inflation is a lagging indicator. I mean, for an economist, and watching inflation is a race between watching paint dry and grass grow. It's a lagging indicator. If you read the latest Fed Beige Book, between the tight labor markets, the increase in cost inputs, irrespective of what commodities are doing because of the tariffs, it was just filled with cost-push inflation pressures that haven't come into the system yet. I would say virtually guaranteed forecast, especially now that oil seems to be bottoming, inflation will be higher in the U.S. in the coming year. It's going to catch a lot of people by surprise. We were talking a year, maybe 2-3 years ago, about how the Phillips curve in the U.S. was broken. Well, I got news for you. It ain't broken anymore. Wage growth is accelerating, and you see it across a broad array of measures.
Right.
And so I think that's, look, if I'm Jay Powell, and I say, despite our imperfect models, despite their imperfection, neutral is not 2 to 2 1/4. I don't even know how anybody can come up with that framework. When you have real growth, let's even say real supply side growth, demand growth is running at 3 to 3.5 because of the fiscal stimulus. That's aggregate demand. That's temporary. The supply side of the U.S. economy is growing 2%. Aggregate supply is growing 2%. So the real rate has to be 2%. Now, if inflation was 0, you'd say, okay, 2% nominal, but inflation's not 0. Inflation is actually at 2%. So I'd actually say when he's talking about going through neutral, he's saying, boy, we wouldn't mind getting to 3 to 4%, and I don't think they're going to get there. But this notion that Ben said that the market's not priced enough for the Fed, with all the Trump tweets and what's happened with the stock market, there's only one more rate hike priced in for next year, and that's in the second half of the year. I actually think the opposite, that the market continues to underprice what Powell is willing to do.
Ben, what do you think?
Well, I agree with John. Well, of course I agree with John. He's my boss. So. No, I think that the Bank of Canada is a bank with an agenda. The agenda is a weaker Canadian dollar. Of course, the Bank of Canada will never admit that that's the case. In a speech, Paula said, we do not have a dollar agenda. The dollar is off the table, remember? And, Bismarck once said, it is never an official policy until somebody officially denies it. And you know what? I think that's a policy Rightly so. Remember the chart I showed you, our export performance. I think we do need a lower dollar, especially after what's happening in the US with the tax cuts. So I think that if he can, and I think he can, he will go very, very slowly with interest rates. One reason is actually to take the dollar or keep it low or even take it lower to stimulate exports in addition to other measures. So that's the way I see the situation.
Okay, let's move to the US and Canadian political scene. To put it mildly, I guess, we're in highly unpredictable political territory. The US Canadian federal government and US federal government relationship has gone from what people saw as a bromance 25 months ago to seemingly a pretty tense, sometimes effective détente. We got through NAFTA, thank goodness. But we've had regime change in almost all the provincial elections in the last 18 months. As you mentioned earlier, Ben, we have a pending federal election in less than a year. South of the border, we now have a split house. John, let's ask you to put your Deputy Prime Minister hat on for this one. What do you see as the two or three most powerful forces, and they could be domestic or they could be foreign, that's really going to shape the next 24 months on the political scene in Canada?
Well, let's really make sure you focus on the fact that I think it's October 21st is election day.
Yeah.
So, you know, when we take the economic forecast, we say, well, something might happen in 2020. You know what? Canadian politicians aren't worried about 2020 yet. They'll worry about that on October 22nd, 2019. So it's all about the current situation. Now, there are a couple of issues lurking here. I agree with Ben's comment on the wisdom of signing the USMCA. Get out of Dodge with the best we could get as quickly as we could. It was the right thing for us to do. But this is not problem-free for two big reasons. One is that agreement did not deal with the issue of the tariffs that were imposed on Canadian steel and aluminum under Article 232 on the basis of national security. Now, in addition to the fact that if there were judges that were ever appointed to the dispute resolution tribunal of the WTO, they would probably find that that is an inappropriate use of Article 232, but that's not happening because somebody south of us is not appointing, not agreeing to appointments. The notion that Canada is a security risk to the United States is laughable. And the importance, ironically, of Canadian aluminum to the U.S. war effort in the past has been quite significant. So we've got a very highly integrated market. So that hasn't been resolved. And it sits there not only unresolved on steel and aluminum, but in the enforcement provisions of the auto parts, the auto section of the USMCA, 232 is acknowledged as an appropriate tool for enforcement. So in other words, in the agreement, we've kind of conceded that the United States can use national security as a trade remedy enforcement procedure against Canada. That's pretty problematic. So that's point one. We're not out of steel and aluminum yet, which means we've got a whole host of retaliatory tariffs that are still in place against goods coming in from the U.S. Who pays the tariff? Well, we pay it, of course. The second observation that I'd make is the USMCA still has to get through Congress. And as you commented, the House of Representatives has flipped. And, you know, despite the fact that Donald Trump is uncharacteristically for a Republican president, apparently anti-trade, the Democrats historically have been anti-trade, and many of the ones that were newly elected will continue to be of that nature. And so, one, the passage of USMCA is by no means guaranteed, and secondly, we have no idea what the president will do if it doesn't pass. Will he, in fact, make good on his threat to pull out of NAFTA 1.0, if you want to call it that. If he does, what will Congress do with that? There's still a lot of uncertainty lurking there. I have a feeling that that will play very heavily into the next 10 months here in Canada as we build up to the next
So
election.
we're not out of the woods on trade.
Not at all.
Ben, what are your thoughts on the key issues that will shape the election that comes?
Well, I will go beyond the elections. I totally agree that the elections are just next year, and I think that the government does not have a major issue. Yes, we have pipelines, we have carbon, we have all those business, but nothing is big enough to really, so I agree that they are in good shape, we'll see. But I would like to focus on something beyond that. I think that's much more important, and I would like to see governments at all levels actually getting more active on that. And here I will go back to this mismatch in the labor market, which I believe is the #1 issue facing our society, our country, over the next decade. Again, people without jobs, jobs without people. The quality of employment is actually going down, unfortunately. The income gap is widening. And listen, we all know that the job market of tomorrow is going to be the most exciting job market ever in terms of opportunities. But the wall that is protecting this piece of paradise is getting higher and higher and higher. And our kids and grandkids will have to climb this wall, and many of them will not make it because they don't have the skill set that this new economy needs. They will fall behind. So there are two options here. One is simply, and that's Trump, that's Brexit, that's Brazil. You know, and I think we are naive to believe that it's not happening in Canada. So this income gap is really the #1 force that will shape the political scene of the future. And how we respond to it will be key. And, you know, one way of doing it is simply put more money in the pockets of those people. That's why all of a sudden you see all kinds of experiments of a minimum income guarantee. It's not a coincidence. The other, which I believe is the only way to go, is make sure that we have the skill set. And education is growth policy. We need to rethink education in this country in a big way. I think all of us are failing young Canadians. We are failing them. The labor market is changing at the speed of light, and the education system is behaving like nothing happened. And we have to rethink education in a way that will make sure that there is alignment between the skill set and what this economy needs.
So we talk about job mobility and people moving to where the jobs are, but as you say, if they don't have the skills to fulfill those jobs, it doesn't much help. Retraining, re-education, vital as it is, takes a decade, 2 decades. How do you see this playing out politically?
Well, I think that we have to, governments, and I spoke to the Prime Minister about it, and I believe that governments, regardless what direction, what philosophy, must address this issue. And again, we have to rethink education. Canada is the most educated country in the OECD in terms of the number of people going to universities. But we are also the #1 country in terms of the number of educated people that live in poverty. So we cannot translate those degrees into jobs. So we have to be much more creative in the way we think education, like think an umbrella degree with people having like the dual system in Germany where you can have a BA in history and a minor in plumbing. Same roof, same tuition, much more flexible labor market that will be able to actually lift this economy because we need it desperately.
John, you've, in your time at the council, had studies done and a lot of focus on this notion of greater productivity, retraining, what the education should look like for young people. Give us a quick sense of that, please.
This is easier said than done, truthfully. As you know, we've launched a major initiative in collaboration with universities and colleges in Canada to ensure that every post-secondary student in Canada has the opportunity of some work-integrated learning experience. And that could be an internship, could be an apprenticeship, depends on the sector or what it is, because all of the studies show that that is going to enhance employability, it benefits employers because they get a chance to test drive new talent, and it's overall an important thing. But I think what Ben's getting at is a lot more fundamental. I mean, we consistently score poorly on international evaluations. The PISA test, for example, which tests a cohort of students internationally in both literacy as well as math and science, we do poorly in that. Now, my view was that, you know, if we did as poorly in Olympic men's hockey as we do on the PISA tests, we'd declare it a national crisis and we'd have a Royal Commission trying to solve it. But we kind of shrug at these things, and I don't know, we say, well, I wasn't good in math either, so I guess it's okay if the kids aren't doing that well. We don't train our teachers well. Math is often taught in schools by teachers who have no background in the subject matter whatsoever. So, you know, I think that when you try to get your hands around the nature of this problem that Ben's alluding to, it's actually very complicated and cumbersome, because the way we govern education in this country is extremely decentralized.
And it's not a quick fix.
It's not a quick fix, but on the other hand, we're still following a process that was established in an agricultural era, and not a whole lot has changed in that. I mean, we're putting computers into schools. That's great. And the access to some of that technology is good. Schools vary significantly from area to area and province to province, and outcomes are not great. And I think that again, for Prime Minister Trudeau, I'm sure he'd love to say that's his top priority, and the provinces would have a conference to see how to head him off at the pass, because he'd be interfering in their jurisdiction.
David, have you got a thought on where politics in the next 12 or 24 months might conflict with good economic policy and measures? What do you worry about as we approach an election?
Okay, well, the first I'm just going to comment on is you know what USMCA stands for, right? Which is U.S. must come ahead. Nice acronym. Donald Trump's a natural genius to come up with that. You know, first thing I'll say is just this level of complacency that we're supposed to be optimistic because we dodged a bullet. There's absolutely no doubt that what you want to call USMCA or NAFTA 2.0 is not nearly as good as what we already had. So you can't compare this to the counterfactual. You got to compare it to what we already had. I think in terms of the politics, let's talk about Canada first. So I'm looking at the polls, and they're saying right now that the Liberals have regained a 10-point lead over the Conservatives. They would win a huge majority with that. I actually, you know, I mean, everybody was so impressed with the fiscal update by the finance minister because of the bonus depreciation allowance, which you're already seeing in the United States. It's just a short term. It's a timing thing in terms of the influence on CapEx. There's nothing perpetual. There's no multiplier impact from that. But what didn't he do is take out the 2x4 and really redress Canadian tax competitiveness. And I'm not going to get into the fact that we pay a 54% top marginal personal income tax rate, because it's harder for people to move than it is for capital. Any response to really what was important in the United States was the fact that when you're taking a look at combined state, federal against provincial, federal in Canada, their top marginal rate is below ours for the first time in decades. So I'm looking at the budget statement, and I'm just astounded that they had the temerity to use whatever fiscal windfall that they had to actually raise the estimates annually going out on program spending by $6 billion a year. I mean, I'd be happy to campaign against that. Where's that money going? I mean, where's that money going? The provinces have the jurisdiction over education, not the federal government directly. $6 billion of incremental spending. And I don't think we have a government spending problem in this country at the aggregate level. And that $6 billion, but of course it's not their constituency, right, could have funded a 4 percentage point decline in the corporate tax rate in this country and make us tax competitive again. That's our big impediment. As it stands now, what they didn't address is that if you are a North American business, you are still incentivized to book your revenues in the US and not in Canada. So that, to me, I think was a blown opportunity.
Tom,
and so I think, and let's face it, if the Liberals win again, their mandate will continue to be, how do we distribute the pie, the economic pie, as opposed to how do we use tax policy to actually grow the pie? Like father, like son, that's not going to go away. So point two I would make on the US, and this is the good news, I think for us, is, and I'll make this forecast without a disclaimer, and I've already made repeated side bets for multiple bottles of single malt scotch, that Donald Trump will be a one-term president. And I think that the first chink in the armor were the November 6th elections, the midterms, the swing in the House, not just the swing in the House, but the governorship houses, especially in the Midwest. You saw the first chinks in where he narrowly won, which was in the Midwest. We're talking Pennsylvania, we're talking Wisconsin, and we're talking Michigan. And so I think this is going to play very well. I don't know who's going to run in the Democrats. Hopefully it'll be somebody younger, that young Texas senator wannabe that almost beat Cruz. So O'Rourke, I think, is somebody I think that would be a great candidate to run against Trump if he decides to run in the next election. But the good news for us, considering his relationship with Canada, is that Trump's here for another 2 years.
Did you want to get a quick word
Yeah,
in,
well,
John?
one thing I've learned is never predict an election outcome until the day before the vote, because it's hard to get. And in our last federal election, you've got to remember this, in the course of the campaign, Gary, all three parties at one point in the campaign were in first place, and all three parties at one point in the campaign were in last place. And when the music stopped, the Liberals got most of the chairs, but it could have ended quite differently. So when I look at it, I mean, and this is not a prescription, this is an observation. The lesson of the last election to the Liberals was deficits don't matter and tax increases are okay. And where I mean, Stephen Harper lost that election, so it then became a question of who was going to win. Was it going to be Tom Mulcair or Justin Trudeau? Their analysis of the turning point in the campaign was when they actually went out and said, we're going to run a deficit. It won't be big, $10 billion, and we'll get back to balance in due course, but we're going to address some of these things. By the way, we're going to lower taxes on the middle class, and we're going to fund it by increasing taxes on the top income earners by 4%. And they won. So, lesson learned, deficits are okay and raising taxes is okay. Now, we can all agree, as I think we probably all do, raising taxes is a fool's game because you actually, I think we're probably going to come to carbon taxes, but there's an old rule in tax policy, which is if you want to discourage something, you tax it. I mean, it started in England when they would tax the height of your chimney. So everybody kept building shorter chimneys, and all the roofs started catching fire because of the embers coming out of the chimneys. Short chimneys cause fires, but they also get lower taxes. They tax the size of windows, so people started living with no windows. So if you want to discourage something, you tax it. You want to discourage entrepreneurship, effort, the desire to go out and work, you increase taxes, especially at the top end. Bad policy. But the lesson of the election was it's okay. It's okay. And even within a few kilometers of where we're sitting right here, highest income districts in Canada, who did they vote for in the 2015 election? They voted for Liberals, even though they're the ones that actually paid more in tax. So that's the lesson that was taken. And so politics doesn't occur in a vacuum. It occurs in that kind of reality. And I think that Mr. Trudeau looks at these numbers, 10 points ahead. Conservatives don't have a coherent message that they're delivering. The NDP is down to 15% in the polls. When the NDP is at 15% in the polls, Liberals win. End of discussion. So he's feeling pretty comfortable, and he's pretty comfortable in the lesson that he believes he took from the last election.
I'm going to move us
Can I address one thing?
real quick because we got to move to
Okay,
Monday.
but this is a different form of a tax, and it's something I'd respond to about what Ben said about the Bank Canada desiring, I mean, not explicitly, but a weaker Canadian dollar. I'm going to start your comment. It's probably true, but think how pathetic it is that we have to rely on the crutch of a weaker Canadian dollar for our prosperity, which is really artificial. I mean, when the Canadian dollar goes down, people have this mercantilist thought that this is going to be great news for exports. Really what we do, when the Canadian dollar goes down, we have all in this room taken a pay cut. We've all basically cut our price to get back our market share in the global marketplace. I said before, productivity growth in this country is zero. I would actually, if I could campaign on that, if I can get the person on the subway to understand what that means, and it comes down to fiscal policy. So the weak Canadian dollar, because it's a price, the Canadian dollar is a relative price. And we're going down against the Australian dollar, the New Zealand dollar, the Japanese yen. There's not a currency we're not going down against, including the UK pound, despite Brexit. The Canadian dollar is a price. I think everybody in the room understands what a price is. You're all in real estate. The Canadian dollar's decline is not a good thing. It's a symptom of some eroding fundamentals that aren't being addressed.
We can't cut our way to greatness, is what you're saying. Let's move to a real estate topic that matters to an awful lot of people in the room here, particularly those that have substantial investments in Alberta, BC, Saskatchewan. That's finding the appropriate balance between getting our oil to Tidewater versus the need to do something meaningful to curtail climate change and the impact that pipelines and carbon fuels are having. So, John, how do you see this delicate balance unfolding? On the one hand, the government has gone all in on the Trans Mountain Pipeline. They've had some setbacks recently. There's an election pending. They've got to show progress. And yet, on the other hand, they're talking about what is seemingly a very unpopular carbon tax as a way of balancing demand. How do the three of you think that plays out?
Well, you're right. I think they've tried to cast it, Gary, as you might call it a grand bargain. We're going to take real action on carbon emissions, and the way we'll do it is tax it, which I actually think is a sensible thing to do. As I say, if you don't like something, tax it. People will find a way to manage around it. Now, and that was the view that the Business Council espoused. Now, we always said tax it, but return the money to Canadians. So in fact, they seem to be moving in that direction, that you make carbon more expensive, but you lower other taxes, and so that it's not just a revenue generator. By the way, that doesn't mean putting it into green programs. Programs are programs. It's just government spending. It's a very inefficient way to get things done. If they want to have programs who pay for it out of other revenues. So I think conceptually the notion that there'd be a price on carbon is a sensible one, provided it's not just another means of raising government spending capability. And then I don't think that the outcome of the pipeline is quite what they had hoped to see accomplished. I mean, they boxed themselves in by making it impossible to build either the Northern Gateway pipeline and by regulatory change made it so difficult for TransCanada that they withdrew their proposal to do the Canada East pipeline, which is actually the one that many of us think makes the most sense because we're busily importing oil from people we apparently don't like in Saudi Arabia to fuel our refineries in Eastern Canada when we can't seem to get alternative markets for our Canadian products. So shipping it by pipeline east to Quebec and then to New Brunswick makes a lot of sense. Those options being foreclosed, all they were left with was Trans Mountain, probably the least good of the three in the sense that it does require the product to go right into a very populated area. It does put it on ships that go through a very busy harbor, and as we've seen, it's playing out with some difficulty. But truthfully, Mr. Trudeau's gotten no credit for being willing to try to at least get a pipeline built, and is getting a lot of criticism from his base. So you might say it's been politically somewhat a courageous set of moves.
Do you think it gets built in the next 10 months?
Well, I think that
started?
I think they have to have boots on the ground, shovels in the soil by spring. Otherwise, they're going to look like they've wasted a lot of money with some futility. I think that's why they chose not to appeal the decision of the federal court and rather try to comply with it. I think their analysis was it's faster to comply than it is to appeal this decision. So let's get out there, do the consultations. The NEB is having their hearing right now on the impact on the orcas in the strait, and I think everyone assumes that the outcome of that is going to be, yes, there are problems with orcas, but they can't be traced to increased tanker traffic from one project. There's a lot of shipping going through that particular area, and it's not all accounted for by this one project. So I think their assumption is they're going to complete this, and next spring this project will be underway.
David, Ben, your thoughts on, maybe David first, on carbon tax?
Well, in a utopian world, you'd be all for carbon tax for the reasons that we stated. But I don't think that in Canada we can do anything unilaterally and without our trading partners, especially the U.S. We can't just operate in a vacuum. So that's what I'll say. It's a tough argument. I have this argument with my sons all the time. But Canada, in many respects, is a price taker on issues, and I think that this has to be something that has to be undertaken globally. We're just going to continue to crush our local competitiveness if we do this, without the U.S. involved, for example. So the timing might be off. Like I said, I think in a couple of years we'll have political change back to something more normal in the U.S. That's my expectation. I think that the pipeline issue, the energy issue, is really the one area I think where the Liberals are maybe most vulnerable on in the coming year. The question is going to be, how does Scheer articulate what his strategy is to the layperson out there? But to me, this will be beyond just taxes. This will be a defining issue in the coming 11 months.
Yeah, emitting CO2 is extremely cheap. Everybody can do that, and the price is very, very low. So to make sense out of this, it has to be three conditions, basically. One is that it has to be global. Second, it has to be revenue neutral. And third, the price must be right. So is it global? No, only 20% of CO2 emissions are actually under any price mechanism now. So 80% is just free. So that's something that is a problem because we are there, China is not there, the US is not there, so only 20%. Second, it must be, as John suggested, revenue neutral. And it must go back. If you look at experiences of countries like Sweden, Norway, where they're actually successful, it has to be go back to the taxpayers and to companies so you don't punish the economy and households because of that. And the price must be right. Sweden, they're paying 139 per ton CO2. We are starting at $20. All studies are telling us that it should be between $50 and $60 to be effective. So we are not even there. So even if you have 20% of emissions being taxed, most of it is under $10. So it's not as effective. So there's a lot of things to move here. And so I suggest that if you look at countries like Sweden, Norway, Iceland, Switzerland, that actually a success model, if you wish, success story for carbon tax mechanism, all of them have extremely high political trust rate, which means that you have to trust your government to do the right thing with the money before you agree to that. And that's crucial. And I think that's a precondition. So should we be participating, although we are like the 10 decimal points? I say yes, but we have to make sure that it doesn't hurt the economy. Namely, this money must come back, must go back to the companies and households.
It's not really a time of high political trust anywhere, is it? So that's a tough bar to reach. Thank you. This brings our our opening session to a close. Our thanks again to Blackwood Partners for sponsoring this discussion. Please join me in thanking John, David, and Benjamin for what I thought was a really terrific discussion.